Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the NASDAQ100 futures chart. Today's Thursday, so the second last trading session of the weekend. It's been a very positive session so far. We're up 1.82%. But just before we get into today's video, for anyone who is wanting to join my Signal team, please do not hesitate to visit my website, dailymarketmovements.com. I've left the website link in the description of today's video, and I charge a very small joining fee of $29.99. But let's talk about the NASDAQ 100. The NASDAQ 100, it's basically pairing the last couple of days of losses, On Wednesday and on Tuesday, we both, we are declined here in the NASDAQ 100. Not too aggressively, but, we are seeing some strong buying power going into today's trading session. But the volume is still quite low. But of course, we're not quite at the end of the trading session. We've still got around about 3 hours to go here. So, there's still plenty of time for that volume to increase. But the NASDAQ 100 currently just shy of 12,800. And I think what we're trying to do here, guys, is achieve the 50-day EMA. But the big question is whether we break above the 50-day EMA. And I'm going to be honest with you, my honest opinion is probably not. I think that we will get rejected here, and I think that this is an area where you need to start taking profit. So from 12,800 all the way up to 13,100, where that 50-day EMA currently sits, I would see this as a profit-taking area, especially if you were a buyer down near 12,000 like I was and the rest of my Signal team. We still currently hold a buyer position. I'm going to be a little bit more greedy here. I'm going to wait for the NASDAQ 100 to rally a little bit higher because there's some big tech names like CrowdStrike, for example, coming up with their earnings tonight, and I think that they could influence the market towards the upside in the upcoming days. But I think this is a good opportunity. A good opportunity, to take profit. And the reason being is because I've pulled up a chart here actually. And the 1929 to 1932 bear market is it's kind of been compared to the current trading environment that we currently find ourselves trading in at this moment in time. And as you can see, on 6 separate occasions we had double-digit gains here, and then eventually we followed through and created a lower low. Now you might be a little bit confused here because you might be thinking, well, Max, it was only last week when you were telling us that you think that the market has bottomed between 11,500 to 11,000, and the answer is yes. I think this is a temporary bottom in the market. But if I was to be wrong, then I think that a chart similar to this could easily play out, and I think that that would then indicate that we are in a big storm here. At this moment in time, it's kind of a mild storm. Yes, some stocks have come down a lot since the beginning of the trading year, but if we were to take out 11,000, then I think that we could find ourselves trading in a pattern that could look very similar to this. And as I've mentioned, we had 6 double-digit gains throughout that 3-year period. So let's just have a look at what's happened so far in the NASDAQ 100. How many double-digit gains have we had? Well, we've had one here of approximately 11%. That was all the way back on January 24th. We've had a second here where we had a huge gain of roughly, you could argue about 20% here. That was on when was that? Was that February 24th? Oh, sorry, that was March 15th, sorry. And, at this moment in time, we are kind of trading up, from those lows. I think that we have just hit double-digit territory. There we are, we're up 11%. So, this could be potentially the third, double-digit gain. So we could, potentially be trading in this phase here in the market. I'm not saying that we're going to go exactly 6 times. It could be 4, it could be 3, it could be 2. Sorry. It can't be 2, sorry. It could be 3, it could be 4, it could be 5, it could be 6. I do not have a crystal ball. I can't answer that question. But I'm just trying to open your eyes to what the market's done in previous trading periods, in previous bear markets, and these double-digit gains. They're so frustrating because you start to think, is this potentially something different here? I do it, everyone else does it, and then most of the time it's actually no. It's just basically a bear market rally. So that's the big question: are we still trading within a bear market rally here? If we can break above the 50-day EMA, then that shows a lot of strength in the market, and I think we could easily trade up towards a 200-day EMA around 14,000. But that being said, I kind of look around at this moment in time. I look at the fundamentals in this market, and I haven't seen a massive improvement. But that being said, next week, the CPI figures, it's on the 10th of June. Put it in your calendar. It's going to be what dictates the market for the next month. It's either that or the Fed inflation figures. We're going to get inflation, and if it's higher than anticipated, then, that could be extremely bearish for the market going forward. But vice versa, if we get a lower figure than, that is anticipated right now. I think it's around 8.1%. That's the estimate going into this reading. So if we get like 7.9 or even 8%, that's going to be seen as a huge positive in in the markets, and that could potentially influence the markets to rally in the short term. So that's what I'm kind of looking at going into next week. I don't think that we can break above the 50-day EMA before that. We can definitely fall lower. So I would definitely look at this as a taking profit opportunity, and then you kind of just want to be out of the market until we get that CPI reading on the 10th of June next week.